Hello, everyone. Welcome to the market update for Tuesday, October the 26th. What we're seeing right now is something that we've seen off and on for a while now, which is kind of a tired market. Remember, a tired market is when you see sentiment, which is the blue line right here, above momentum, which is the red line right here, and both of those are above Brett, which is the green line right here. Indicates a tired market. Now, again, the market can remain tired for a while, and it doesn't mean it can't keep going up. But something significant happened today, and it's something I talked about last week, that as we're moving into the overbought kind of condition of the market, and as we're moving into that breakout area, we want to kind of keep an eye out for any sort of a bearish reversal candle that looks, I mean, a lot can change between now and the market close, but it looks like we're getting a little bit of that bearish reversal candle today. We'll take a look at that when we look at the individual charts. But that's something to keep in mind here as we look at the conditions. Momentum, you can see, has moved into the extreme range. Now, again, it can get all the way to the far right side of that extreme range. And so just because we're getting a little bit of a bearish reversal candle today doesn't mean that that we can't go higher. It just means in the near term, there's a little bit of weakness there. And I talked a little bit about this on Thursday, that the way the market was looking on Thursday, the higher probability was that we would maybe start to move sideways or pull back a little bit from this area. We'd had such a strong run up into that breakout area that it looked like we could maybe pull back a little bit. I don't expect to be a major pullback. I still think the market could kind of run in November, have a pretty good run in November. But that's something definitely to pay attention to, and that's why we're really not going to do a whole lot with the portfolio today. I did make some moves yesterday that I'm going to point out when I get to that, but we're going to kind of sit tight a little bit and see if we do pull back, if it does create some nice opportunities elsewhere that we can get into. The Brett is still lagging. I mean, it's still been in this kind of trending area right here, close to going into the high area, but it's been lagging a little bit, and that's been concerning. What that means is that there's fewer stocks that have been kind of leading to the recent rally. Now, sometimes that can happen during earnings season when certain companies, particularly larger companies, report earnings, can have big moves off of those earnings reports. They can kind of create a little bit of a distorted move in the market. You know, for instance, a stock like Amazon is weighted very heavily in the NASDAQ 100 index. If it had a big move up on its earnings report, it could cause the NASDAQ 100 to have a big move up that day. But if you looked at the individual stocks within the NASDAQ 100, maybe only half of them rallied that day or moved up that day, which tells you that there wasn't a real broad-based rally that rally was mostly due to one stock that had a big move, and an unusually big move. We see that in the Dow all the time. Dow is a price-rated index, so the larger stock, the higher price stocks in the Dow will have a greater impact on how it moves. United Healthcare is a big, one of the more expensive stocks in the Dow. So if it had a big move up or down, it could distort the index compared to the Brett, at least. So that's something we want to keep an eye on there. See if that picks up a little bit. We see a little bit more participation. And maybe this is what could lead to maybe a little bit of a sideways move or pullback, where maybe a lot of individual stocks are a little overextended. They're not participating as much right now. We get a little bit of a pullback or a little bit of a consolidation, and maybe if it starts to run again, there'll be more participation, more stocks participating in that rally there. Sentiment is still high. It hasn't moved into the extreme range, but it's getting very close. It's pretty much just remained in these elevated levels here, but this is something to keep an eye on. If we do start to rally higher, do we immediately push that extreme range and really get complacent? Market gets very complacent. That'll be something we want to keep an eye on there. I've been looking at before we look at that, the buy-sell ratios again, not in any sort of extreme range here. Buys are still above the sells, and there's a little bit of a wide move there, but not extreme. There's still room to run there. The buy-sell ratios of the overall market are above 1, so technically, if there is a pattern that looks good, you could make trades if you wanted to in this environment. I'm not really going to be recommending a lot today just because of the way the short-term pattern looks. It looks like we could pull back a little bit. I'd rather save that to Thursday to see if we do pull back and maybe create a little bit better entry point on some patterns that we might like or might consider. Sentiment is getting pretty high. Let this load up here. We're getting pretty close to that red line. And so definitely we're in an area here with the bearish reversal candle and all these other things we're looking at. Definitely an area where it would be, I could easily see where the market pulls back a little bit based on what I'm viewing there. So now one thing I've been looking at a little bit on the indexes tab right up here is starting to keep an eye on the buy sell ratios of the different sectors or different indexes. We're not the Dow utilities are a little bit of a extreme. They're in double digits right there. Now the Dow industrials were in double digits. There's only 30 stocks in Dow Industrial, so that can fluctuate pretty quickly, and that's why I don't want to focus too much on these smaller indexes that can shift pretty quickly from a double digit to single digits. The Russell 2000 is still just under a 3-to-1 ratio. S&P 500 about a 5-to-1 ratio, but we're not showing any sort of extreme level though. Those aren't close to those double digit numbers that we'd start to be concerned about. So we're okay as far as that's concerned. Let's move over to the individual stocks. Oops, hold on here. It's weird. Must have been a reset there to have me log in again. Just a second. All right, let's move to the individual indexes here. And again, what jumps out at me, here's the breakout area right here. We did end up breaking out of that. We paused a little bit right here. Thursday and Friday we're right at that breakout area. I thought maybe we could move sideways right there or pull back a little bit in that area. We've had such a big run up. We did end up breaking out. Although I did point out it was still possible we break out a little bit and then maybe move sideways or pull back. And that looks like kind of what's happening here. But we have a bearish reversal candle today. Here's where we open today. If we close, again, a lot can happen between now and the market close here in a couple hours. But if we end up closing lower than where we opened, and that remains that red-looking candle right there, that would be a bearish reversal because we opened higher. We weren't able to maintain that open price. And this would also create a situation where if we opened higher as we did and we closed lower than we did, closed lower than the open, but still higher than where we closed yesterday, that's what can create what I like to call one of these black candles, where it's just a bearish reversal price action. Okay. Another thing that I'll point out is that the VIX is up today, so we have a situation where the S&P is up and the VIX is up. Remember, usually they're moving in opposite directions. Whenever they're moving the same direction, you need to pay attention. And in this case, if you have a situation where the market is going higher and the VIX is moving higher, it's telling me that people are buying, the professional traders are buying stocks, but they're also buying protection. They're not trusting the rally right here. They're buying some protection along with the buying the stock. So that's a little bit of a warning sign. Now again, it doesn't mean that the market has to drop from there. It doesn't mean that that can't reverse. That we couldn't see the suddenly the S&P have another up day tomorrow, and then that VIX drops right back down. But as we'll look at the VIX here in just a second, it's at a very low. It's at a low, a multi-month low right now. So when you're at that multi-month low, you have the market at a new all-time high, and you're getting, a bearish divergence where the VIX is up for the day, but the S&P is up for the day, and the S&P is forming a bearish reversal candle. You got to pay attention to that. You start lining up these clues, and from a probability standpoint, again, the probability is leaning more towards a pullback right here. But I can't emphasize this enough. You can't know exactly what the market's going to do. The market can always shift, direction. And usually in a condition like this, the only way it would shift, in my opinion, from what it's showing us right now, is if something very bullish comes out that the market wasn't anticipating or expecting. Obviously, we can't trade based on something we don't know is going to happen. So we have to focus on what we're seeing right now and what the probability of what we're seeing is right now, and manage that. Again, if you're obsessed with wanting to know exactly what the market's going to do, you're going to have a very frustrating trading career. And usually these types of people, not only are they always frustrated and never seem to be happy or satisfied with their trading or investing, but they also spend a lot of money. They spend a lot of money trying to find the next guru, trying to find the next trading system that's never going to allow them to be wrong again. And they're always chasing for something they're never going to find. And so I always try to encourage people to stop doing that, to just accept that we can't know exactly what's going to happen, and to focus on the next best thing, which is being able to analyze the probabilities and just do the best we can based on those probabilities. By the way, understanding the probabilities, if you can read this stuff, a lot of people can't read price action. A lot of people on a day like today would say, "Oh, the market's great; it's breaking out to new all-time highs, and that's definitely a reason to go buy." And if you know how to read that as a bearish price action day, that gives you the edge. That allows you to say, "Hey, wait, this is not a good time to buy. Let's wait to see if this pulls back a little bit off of that price action. Might give me a better entry point." And again, it could just be something simple, but maybe you enter a stock $5 cheaper than you would have chasing it in a bad situation. That can make all the difference in the world. You keep doing that consistently time after time, and that's what's going to give you that edge over somebody else, and ultimately could lead to you having success over other people. So, all right, so we'll keep an eye on that. I'll definitely check on that on Thursday to see if anything's changed from that, see if we do end up pulling back from that. The Dow, again, same thing, breaking out, bearish reversal candle right there. NASDAQ, QQQ here. Now, not only are we getting that bearish reversal candle. Now, by the way, the price action is bearish the way it's behaving, but this is also what we call a spinning top candle, at least if it closes this way, where you have a real small body right here, and then you have intraday high, intraday low. A spinning top is just simply an indecision candle by itself. Would say it could go either way. But again, when you put it in the context of everything, the big run up ahead of time, and in fact, in this case, you're right at the breakout area. The intraday high today was right at that breakout to a new all-time high, and now you're getting that indecision candle. That you add that together, and that's a pretty short-term, near-term bearish signal there, and it's looking like maybe we get a little pullback off of that all-time high. But like I said, I think this is short term. I think maybe we get a little bit of a pullback off of this, and maybe we move sideways a little bit this week. There are a lot of earnings coming out this week, though, and so part of me feels it's hard to feel like we're going to move sideways with so many of those major earnings reports coming out. We just had Facebook last night, and got other big ones lined up this week. But based on the context here, it also makes me feel like maybe there's a greater chance that some of those larger reports might disappoint a little bit based on the current price action. But remember, those are unknown events, and who knows? We could just reverse this, and Thursday I could be talking about jumping in because we're taking off again. So, all right, Russell 2000. We came right up to this little resistance area right here. And then we've got a little bit of a bearish reversal candle. Now we don't have the same looking candle on this one. This one is trading lower for the day. The others were showing that they were up still. So they were showing, even though we were trading, here's the cues, even though we were trading lower than where we opened, we're still up compared to the day before. That's the same with the Dow, same with the S&P. But the NASDAQ or the Russell 2000 is trading down. It just has a plain bearish reversal candle right at that resistance area. Again, keep an eye on the context of the Russell. Let's go to a longer term chart here. You know, we're kind of keeping an eye on this upper range and this lower range. As long as we're within that range, it's not, at least for this index, it's not really telling us a whole lot. But if it breaks out one way or the other, that'll be significant because of how long it's been in that sideways range. All right, bonds. Now, the way bonds were behaving last week, we're looking at a possible bullish reversal. We had impulsive down. This was corrective. This was impulsive down. This was impulsive up. And at the time of the update, we were kind of moving a little bit sideways right here. Looked a little bit more corrective. Since then, we've dropped sharply down right in here, and then now we're kind of back up again. We're kind of whipsawing a little bit. So what I want to do here is back out a little bit and look at this whole area right here. So this whole move right here looks more corrective, which would be a little bit more bearish for bonds, because the previous move into that sideways move was down. We're getting kind of the sideways move here. Could that lead to ultimately another move lower? That's possible, but the key, what we could do is look at the key areas right here. We're going to look at this high right about 146. And we're going to look at this low down here at about 141. Down in this area right here. If we break out above here, that would be a little bit more bullish for bonds, maybe more likely that we're actually going to work our way back up towards these highs. If we break below this low area down here, much more likely that we're in a downtrend. We're resuming the downtrend that started from this move down right here. So those are the two areas you want to keep an eye on for the next week. See which way it breaks out of that. Gold, nothing's changed from the wide range that we're watching right now. It's, as long as it's in this range, it could go either way. It could go either way within that range. We've seen it go up and down. Look at this right here. This big up day. Looked like maybe things were taking off, and then bam, it dropped right back down. A couple of days later, right back up again. Today it's down. It's just all over the place. I don't see any clear trend direction until it can either break out above here or break down below here. And so I'm calling this a sideways trend until it can break those key levels there. Oil remains strong, and one thing to keep an eye on. We had a little bit of a bearish reversal, and this is to point out that just because you get a bearish reversal candle, we had a bearish reversal candle here. It moved sideways for a couple of days and shook it off. Had a bearish reversal candle yesterday, and looks like it shook it off today. Sometimes it can happen in some of these really strong trends, but it doesn't mean that we don't pay attention to those. And again, bearish reversal candles are very short term in nature. This was a bearish reversal candle. it did pull back a little bit off of that. It pulled back a little bit off of that bearish reversal candle. So it doesn't have to. These candlestick formations are very short term in nature. We can conclude a bigger possible outcome when we combine that with another chart pattern or something that's a little bit larger. So if the larger chart looks like it's heading lower, and then we get a short-term bearish reversal candle, that could indicate that the drop could start immediately. It would help a little bit of the timing of it. But oil is still in a strong uptrend, and I want to point out it's not in the extreme reversal risk range yet, so there's still room for oil to run. I'm still pretty bullish on oil. Still feel like oil has that potential to continue to move higher. The dollar. We pointed this out last week as well. The possibility that this was here. Here's your trend, higher highs. And that maybe this was a larger bullish ABC pattern right here. Since then, we moved up a little bit on Thursday, back down a little bit on Friday. In the last couple of days, we've started to move up a little bit. Makes me feel like it is a little bit more likely that is a correction right here, and that maybe we see the dollar continue to move up. It has moved back above this breakout area right here, which was today's open. That's significant. Here was a low right here that it bounced off of that previous high. The last 2 days, we've hugged right on that support area. Now we're starting to move up above it. That's going to be a key area to watch, though, because if somehow the dollar breaks back below there, and especially if it breaks to a lower low right here, we might have a differing opinion now on the dollar. We might have to shift our outlook there a little bit. But the way it's acting as of right now, it's acting like it wants to go up, and that's what I'm assuming is that this kind of trend that's been in right here is likely to continue to move up. Now the VIX, this is what I wanted to point out. Look how low it is. It's come all the way down to these very low lows. But then today you had a bullish reversal candle today. So we have a situation where the VIX is up and the SPY, and remember you're always comparing the VIX to the S&P 500, so the SPY is also up. So that's a warning sign. So you combine that with the bearish reversal candle, with the being in the extreme reversal risk, and pretty high probability that we get a little bit of a pullback here. So see if that ultimately takes place. The chip stocks, pull that chart up here. Bearish reversal candle today. Oops, go back. Bearish reversal candle today. Now we're usually comparing this to the NASDAQ 100. The NASDAQ 100 also had that bearish reversal candle, but remember the NASDAQ 100 also was right at the breakout area. So the chip stocks are lagging the NASDAQ 100 a little bit, and that's concerning. We want to see them leading. I want to see the SMH break out before the NASDAQ 100 breaks out. Now that can still happen. If the NASDAQ 100 pulls back a little bit and we see a little bit of a surge in chip stocks over the next few days, that could end up happening. But because it's lagging a little bit, what this is telling me is that it's the chip stocks are not confirming, at least, especially we have to wait until the breakout happens. But if the NASDAQ 100 breaks out and the chip stocks don't break out, we call that non-confirmation. Okay, the chip stocks aren't confirming the move in the NASDAQ 100. And again, that doesn't mean disaster, doesn't mean that everything's lost and the market can't continue to rally. It's just a warning sign. And so you tuck that away as a warning sign as you're analyzing other things. And if you see enough of these things, these warning signs lining up, that tells you to be careful, be cautious. So that's all I'm pointing out right now is it's a warning sign. The Dow transports have really been taking off. They're extreme at the far right side of the extreme reversal risk. They're on a tear. If you look at any of the railroad stocks, the only thing that really isn't taken off is the airlines within the transportation index, but a lot of the trucking companies just really, really taking off. However, again, the Dow is about to break out. You do the same thing with the Dow transports comparing to the Dow industrials. I'm going back to a little bit of a longer term chart so we can see it. So the Dow is already broken out. So the fact that the transports haven't broken out, this is a non-confirmation of that Dow breakout. Now you could say, yeah, but they've on a near-term basis, the transports have been outperforming the Dow industrials, and I wouldn't argue with that. They have, but the fact that the Dow is broken out, the transports still haven't broken out to new all-time high is non-confirmation. It's a warning sign. It's a red flag. We want to pay attention to that. And the fact that the transports are already at the far right side of that extreme reversal risk, they've already had this huge run up. It makes me feel like it's much more likely that we'd see it pull back a little bit before getting to that previous all-time high. It's be much more unlikely that it's going to keep moving up. Possible, but much more unlikely it's going to keep moving up all the way to that breakout. And even if it did and broke out, it'd probably pull back soon afterwards because of how extremely overbought it already is. So all right. And lastly, we can look at Bitcoin. Bitcoin's been on a little bit of a tear as well. It seems to be, it's bumping into a little bit of a resistance area though right here that we need to pay attention to. And it looks like it's maybe in a little bit of a corrective phase. Go back to that 6-month chart. And it might just be a little bit of a corrective phase. This might be wave A of a pullback. It's back up here. Maybe that's wave B, and then you get wave C. Or maybe wave C comes down into this area right here, and then you take off again. But again, I could easily see if the market pulls back a little bit right here, I could see Bitcoin pulling back a little bit. It's been on, like I said, a little bit of that tear right all the way through here. Could probably take a little bit of a breather. By the way, this is kind of lining up. If we do get some selling, we're moving into a little bit of a historical bullish time of the year. And like I said, November is really lining up to be what could be a very bullish month. But I would expect to get a little bit of a pullback before then. And so ideally, what I would like to see is, especially seeing this weakness right now, is to have the market pull back a little bit this week, maybe even a little bit in the next week, or move a little more sideways in the next week, and then really take off and have a nice run up through the end of November. It feels like it's gearing up for that, especially since we're going to get some Fed news that comes out a little bit later into November. As we get into November, we'll have the majority of the earnings reports having come out by then. And now you can make the argument the opposite, that maybe all that could be negative and we could see a bigger correction, and that could be the case as well. Maybe we do get a deeper correction, but I'm not seeing that yet on the analysis on the charts. And so my anticipation is we'll get a little bit of a pullback before that and then have a nice run up. Maybe I see a nice run up in November, and then maybe as we get towards the end of the year in December, maybe we see a little bit more of a larger pullback. although December tends to be a fairly bullish month as well, but we've seen some decent pullbacks in December. If we had a big run up in November, I definitely feel a possibility we get a bigger correction in December if that were to take place. But that's down the road. We got a lot happening before that takes place. But just kind of looking ahead, not locking myself into what I'm looking ahead, but just being prepared and ready in case that plays out that way, and we can take advantage of it. All right, so that does it with the individual charts. Real quickly on the portfolio, I did make a couple of changes. One of the trades, well, let me pull up here. Let me pull it up, and then I'll take a look at the trade history. We'll pull up the trade history so I can get that in the recording for those of you who want to go back and you're trying to track results and dates and all that stuff. You can keep track of that here. Hold on just a second. Let me try this. I know they were doing a few updates on the site, so okay, let's see if we can pull it up now. We've still kind of just been hovering in that, 96 to 98,000. We're still down a little bit. We're still kind of waiting. But if you look at the individual charts, you can see why. A lot of them are still kind of in that consolidation range. Let me show the trading history here, though. So I'm going to freeze it down here at the bottom for those that want to update dates and times and things like that, amounts. But GDYN, it triggered our stop. And so I went ahead and got out. We took a $1,200 loss on that. You'll see that one had a pretty big move down past our stop. So we took a little bit of a bigger hit than I would have liked, but that happens. And then I got into AR right here. Take a look at that here in just a second. First, let me pull up GDYN so you can see what happened on that one. So you see, had the big drop right here. Our stop was right below this area here. I did rebound a little bit today, but now if it can hold this, and if that was maybe a kind of a flush out move, a wave C of some sort, and it can come all the way back up here and break out, I wouldn't mind re-entering on the breakout, but it'd probably need to be on the breakout. I don't think I want to, with as long as this thing moves sideways through here, I don't think I want to mess around with having it move sideways for an extended period of time. But anyway, I moved on from that one. If we see it again on the list, great. And then AR was a new one. Let me switch this to signal so you can see it. Went to a buy signal yesterday. Not only a buy signal, but it was breaking out. Now it's paused a little bit today, but I'm hoping that that's just a little bit of a pullback from that breakout. Hopefully this one can start to take off. This is another oil stock, and oil looks like it's still moving higher. Hopefully it carries some of these stocks. We do have a lot of oil stocks in the portfolio right now. Hopefully we can get a little bit of a run off of those. But let's go through the current positions here. Again, some are still pretty close to being stopped out. And hopefully, if the market does pull back, it doesn't stop us out of too many. It can on some of these, hopefully they kind of just remain kind of moving sideways. Our stops below here on SBOW, so we're still okay on that one. Looks like it's just kind of in a consolidation. IKNX, same thing. This one, though, I'm just getting tired of it moving sideways. Our stop, I think, is below this area here. TTI starting to move up now. This little pullback. So we got in on the breakout on the buy signal, and then it's kind of pulled back a little bit. That happens. That'll happen from time to time. That's the nice thing about stock trades, though, is you can kind of wait it out a little bit for it to take off again. It looks like it's gone back to a buy signal and could start to take off. Hopefully that puts in a higher low right there, higher high right here, and work its way back up to this previous high would be nice. IRIX, again, just looks like a good pattern if it can break out and start going, but it's just kind of in the sideways range. Our stop's down below here, so again, a little bit risky that it could dip down a little bit and stop us out. Wouldn't be a very big loss. Shouldn't be unless it has a really big down move like GDYN did. But after being in these things for a while, you'd hope that they pay off and start moving. It's not surprising, though. We have a lot of these are moving sideways just because even though the market has been rallying a little bit, I talked about the market breadth hasn't been great, meaning that there's been fewer stocks have been leading that rally. A majority of stocks have been moving more sideways or even pulling back a little bit. Rig, same thing. Consolidation right here, waiting for it to go. I think our stop's down below here, though, so I think we're still fine. And that's what I'm saying. Although we're down a little bit, if these stocks can just start to run, that'll change very quickly. I mean, we're right there where we'll be positive momentum if we start to get a little bit of a move here. TELL, again, our stop's down below here. Just wait. It had a nice update yesterday. A bit of a pause day today. Just waiting for it to get going. ORMP actually went back to a buy signal here. That one's looking pretty good. Again, you're holding that. You got this kind of ascending triangle formation. If it can really break out of this, it can really take off, which was the reason for the trade in the first place. BKU, I got in on this little, it looked like it was taking off right here. Our stop is below here. It's a pretty tight stop, but we're getting kind of close to a little bit closer than I'd like. But overall, I like the pattern. If it can start to move up, it looks like a nice little bullish pattern if it can start heading back up again. And then AR was the new one I entered. So that's kind of where we're at. There were a couple stocks that I'm going to go ahead and add to the watch list. I told you I didn't want to go through a whole lot here in the sectors, but there's a couple that I kind of like under computer and technology. Under the hold section right here, one of them is SDGE, 95 strength rank. And it recently went to a buy signal. What I'm looking at is, again, the pattern, lower high, lower low. It's had this big decline, lower highs, lower low. We see any sort of a sign of a reversal. We get the sharp move up right here, which went to a higher high. It's pulled back again right here. What we're looking for is, does it start to move back up and give us a higher low, along with going back to that buy signal? Could indicate a potential trend reversal at that time. Now this thing could keep dropping and go to a lower low, so we need to get that confirmation, but at least I thought I'd throw it in the watch list so we can kind of wait for them, see if it gives us that confirmation. So add to the watch list up here. This, again, for those that are new, you click on this little green plus sign right here. We can add it to the watch list. You're going to have to create a watch list, but I'm going to add it to the one I already created here, the stock specific class. We're going to click save and go to watch list so we can add in an alert. Here it is down here. We want to click on this little box at the right side. And we want to set up an email alert here that's going to let us know when it goes from hold to buy. So we could consider it for a trade. Signal changes from hold to buy. Click save. Let me do one more in that same sector. Computer and technology. 3D systems, DDD right here is a ticker symbol. 93 strength rank, down a little bit lower. Let's go ahead and click on that. And again, this one we need to, you kind of have this lower high, lower low right through here. Hasn't broken above here yet, but it has had possible higher lows right through here. We're just waiting for that, that buy signal. Let's see if it can break above this, break to a higher high right here. And again, I don't know, even if it does do that, I'd have to kind of see if I wanted to buy it, but I'm going to go ahead and throw it in the watch list anyway, just to keep an eye on it. All right. Now there are some stocks here in the watch list that are looking pretty good. Really, these three right here: CDEV, CPE, and CDR, are ones I really like. This one actually has already kind of gone. This is breaking out already. Might have missed that one. I had that nice little pullback here. Went to buy signal yesterday and broke. It looked like it's breaking out today. Now you could buy that breakout. I'm not entering anything new right now just because this is another oil stock. I already have a lot of oil stocks, and I don't want to enter anything new with the market conditions being a little bit more bearish in the near term. But that's one I like out of that watch list. And then the other one's CPE, another oil stock. Just went to a buy signal today. This little pullback right here. You know what? Boy, I'm going to change my mind. Because you saw that last one, it went to a buy signal and then it broke out. Based on where we're at right now, if I put a stop down below here, even if we do have a weak market for a couple of days or so, I don't anticipate it to come all the way down and stop us out. That's a pretty nice looking pattern, and it is going back to a buy signal. Let me check the other one real quick. CDR. Yeah, I'm not. I don't like that one as much. So let's go back to CPE here, Callon Petroleum. I did put a stop down below the October 22nd low. It'd be about $49. Add the portfolio right here. $49 stop. Let's see, 200 shares would be a little bit too high. Let's do 175. So I want to keep the transition costs under 10,000. Portfolio at risk between that 1% to 1.5%. Looks like we're right in that range there. All right, I'm going to go ahead and purchase this. All right, CPE, don't make me regret this. All right, that's all I have. Bottom line, again, wouldn't really be jumping to a lot with the conditions we're in, at least near term. Thursday it can be different though. We might see something different. So we'll wait till then and see if there's something, some new potential trades we can get into off of any sort of a pullback. All right, thanks everyone. Have a great week. We'll see you Thursday for the stock specific class. Bye now.